Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is about to test and has already tested actually a quite strong monthly support and demand area. In fact, this previous level of support and demand from which all this move to the upside was created has already been tested here. However, the market seems to be heading once again for another test of this level. So from a monthly perspective, what we could expect is some short-term bearish price action and then some longer-term bullish continuation, essentially for the market to create and complete this inverted head and shoulders that we have here from a monthly standpoint, with the left shoulder here, the head here, and the right shoulder here. We can also notice that from a pattern standpoint, we clearly also have an impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And what we can see is that we have a perfect 0.618 Fibonacci retracement lining up exactly with this previous level of support and demand, creating a confluence of support in this area that this market could easily be attracted to. So from a monthly perspective, it is clear how we could expect some short-term bearish price action for another test of this zone. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, also here the situation is quite clear. This level is structure, was previous structure resistance here, turned structure support here after the market broke it to the upside, again acted as structure support here, and now the market could easily go for another test of this zone. So also from a weekly perspective, there is a possibility to see some short-term bearish price action being developed before, yes, then having more bullish continuation. But at least for the short term, there is a possibility to see more bearish continuation. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, the market has just broken structure to the downside. This is now previous daily support from which this rejection to the upside was created, which has now been broken to the downside. Now, since the market in breaking the level to the downside has created an impulse to the downside, after an impulse, you would expect a correction and then another impulse to the downside. So if we want to measure this correction, what we have to do is take our Fibonacci from the high to the low of the impulse leg. And what we can notice is that we have the 0.32 Fibonacci retracement lining up exactly inside of the level of previous daily support and resistance, creating a confluence of resistance inside of this zone, which we could in fact expect as market to want to test and then to reject to the downside. And also, let's keep in mind that inside of a confluence of resistance zone, you would expect to see more institutional shorting, which at that point could further increase the probabilities of a potential rejection to the downside away from this level. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their positioning, and we look at the data precisely for the euro, the first thing to keep in mind is that if we're looking at the data for the euro, we're actually already looking at EURUSD because all currencies on the spot are traded against the USD. And what we can notice here is that with the last reports, net positions have in fact been decreasing. We went from having 62.8k net positions down to 48.3k net positions, showing how institutions have been moving back to the bearish side for the euro. And since all currencies on the spot are traded against the USD, if institutions are decreasing their net positions on the euro, they're actually decreasing their net positions on the euro USD. So essentially, they are shorting euro USD. In fact, we can notice how with the last report, institutions have added 14,400 shorts on euro USD and closed 11,600 longs. So clearly, institutions are expecting a bit more bearish continuation. Now, let's keep that in mind and move back to the charts. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you see on the screen and in the description, so you never miss new updates. Now, back to the analysis. Moving to the chart, let's keep in mind that institutions are adding shorts. Now, if the market will retrace to this confluence of resistance, since institutions are already shorting, this creates even higher probabilities that we could see more institutional shorting instead of this level, which at that point could further increase the probabilities of a potential rejection lower for the market to go and test that support zone that we have previously identified on the monthly and weekly timeframes. So if the market will correct to this area, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market, at that point, I definitely would not be surprised if we get a potential rejection to the downside, completing this daily impulse correction and impulse pattern to the downside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.